Welcome to the online platform Education Unlimited as we continue our search into the subject, the principles of accounts. Today's presentation is on the double entry system of accounts. Please remember that at any time during this presentation, you may like, share, or subscribe to this channel. I hope that you will enjoy this presentation. Before we get into the details of the double entry system of accounts, it is important to look at some of the categories of accounts. From our last presentation, we looked at assets, and assets can be divided into two categories: fixed, also called non-current assets, and current assets. Liabilities is also another category of accounts, and liabilities can be divided into long-term and current liabilities. And then capital is another category of accounts. As we continue to look at the double entry system of accounts, we look at two important categories of accounts: revenue, which is money coming into the business, and expenses, which is money going out of the business. As we continue to lay the framework for the double entry system of account, let us quickly recap the accounting equation. The accounting equation is assets is equal to capital plus liabilities. It can also be capital is equal to assets minus liabilities, and it can also be liabilities equal assets minus capital. As we continue to lay the foundation for the double entry system of accounts, assets, example of assets are premises and cash at bank, cash in hand, stock. Examples of liabilities are loan from J. Brown and creditors. Examples of revenue are sales and interest received. Examples of expenses are electricity, salaries, wages. The subject of accounts is a subject that involves theory and practice. The practical aspect and the theoretical aspect. And so the double entry system of accounts has a general rule. The general rule is that the double entry system of accounts ensures that for every debit entry or entries, there is a corresponding credit entry or entries. While in the previous slide, we looked at the general rule for the double entry system of accounts, let us look at this guideline so that to increase assets, we would debit the asset account. To decrease asset, we would credit the asset account. To increase capital and or liabilities, we would credit the accounts, and to decrease capital and or liability, we would debit the account. For revenue, we would credit the account if we want to increase revenue, and we would debit the revenue account if we want to decrease revenue. To increase expenses, we would debit the expense account, and to decrease expense, we would credit the expense account. These are some vital framework, a vital foundation of how one can master the double entry system of accounts. Our next step, we would look at the debit side and the credit side and look at the format for the double entry system of accounts. So the double entry system of accounts is normally done in various ledgers or books, so that this side of the account is called the debit side and this side of the account is called the credit side. So in between the debit and the credit side, we should list the name of the account, so that on this side, a column is there for date. The column beside date, as we follow the cursor, is normally called details or particulars. The column beside the details column is called folio, and the column beside the folio column is called the amount. So we are finished with this side, and now we look at the credit side. On the credit side, there's a column for date. Beside the column for date, there's a column for details, also called particulars. Beside the details column is a column for folio, and beside the folio column is a column for amount. But let us get into more detail here. The date is the date on which the transaction was done. The details or particulars is the name of the accounts or accounts affected. The folio column would give us a abbreviation for the name of the ledger or book from which the account comes. And then in the amount column, we would list or record the amount of the transaction. So let us look at our first transaction. On January 1, 2020, A. Brown started business with $100,000 cash in a business bank account. The first thing that we will do is to look at the two accounts that are concerned. And so one account would be cash at bank, and the other account would be capital. Why is it capital? Once we see this term, started business, it signifies that we must open up a capital account. And then the money that is used to start the business is money in a business bank account. So that the two accounts concerned are capital and cash at the bank. Those are the two accounts concerned as we move on to recording this transaction in the general ledger. The double entry system of accounts guideline was that to increase capital, we would credit the capital account. So in the general ledger, on January 1, looking at the cursor, 2020, January 1, under the detail columns, the capital account as a cash at bank, the folio is CB, meaning cash book. So that cash at bank is a column in the cash book. The amount is $100,000. $100,000, so that in the capital account on the credit side, this is the entry that we would record. Our next step is to look at the cash at bank account. So remember, the two accounts concerned are capital account and cash at bank account. Double entry system for this transaction is to debit the cash at bank account with capital. On the debit side, January 1, 2020, the details would be capital account and the folio would be general ledger, because the capital account is listed or recorded in the general ledger, and under the amount column we'll put $100,000. Here we completed the first transaction. Transaction number 2. On January 3, 2020, A. Brown bought land for $10,000 paying by check. The two accounts concerned are land, which is an asset. It is a non-current, also called a fixed asset. And the other account concerned is cash at bank. Once we see the term check, we know that it is a cash at bank. These are the two accounts concerned as we go now to do the double entry system of accounts. To increase an asset, we debit. So we debit the land account on January 3 with cash at bank in the details column. Folio would be CB because cash at bank is a column in the cash book. So the folio would be CB, and under the amount column, we put $10,000. This is the land account. The double entry for the land account would be to open up the cash at bank account. Let us go. So in the cash at bank account, on January 1, we had capital coming from the general ledger of $100,000. That was a debit because to increase an asset, we debit the asset account. But to decrease the asset, because purchasing the land for $10,000 would decrease the cash at bank account, so we would credit this asset account on January 3 under details land account folio GL, meaning general ledger, and the amount $10,000. So this is how our cash at bank account would look after completing the second transaction. Transaction 3. On January 7, 2020, we bought fixtures and fittings for $1,000 paying by check. First of all, as usual, we look at the two accounts concerned. The first account is an account called fixtures and fittings. The other account is our cash at bank account, and we use the term check. Once we see the term check, we know that it's our cash at bank account. So the two accounts concerned are cash at bank account, which we would decrease, and our fixtures and fitting account, which we would increase. So the double entry system means that one account must be debited and one account must be credited for the double entry system of account to balance. So let us look now at this transaction. To increase an asset, we debit. So we debit the fixtures and fittings account which is in the general ledger. So the date, January 7, 2020, under the details column, cash at bank, and under folio CB, because the cash at bank account is in the cash book, and under the amount column, we put $1,000. Our next step is to look at this double entry into the cash at bank account. Here is a look into the cash at bank account. Remember, on January 1, following the cursor, the account was opened up with capital of $100,000 being on the debit side, so that to increase an asset, we debit. So the cash at bank account is an asset. So to increase this asset account, we debit. But on the credit side, to decrease an asset, we credit, so that we spent money out of this 100,000, we spent 10,000 to purchase land, and on January 7, we purchased fixtures and fittings for $1,000. The folio being general ledger for both of them, and the date is also important. The details or particulars column is important, where we put land account and fixtures and fittings account. And of course, the amount column is very critical. So this is a look at our cash at bank account after the third transaction. Transaction number 4. On January 9, 2020, we bought a motor vehicle from A. White on credit for $2,000. This transaction is different from the other transactions because this one does not include bank, so that the two accounts concerned are motor vehicle, which is an asset account. So this asset account was increased. So we would debit this asset account. And the double entry is an account called A. White. A. White is a liability. So to increase this liability, we would credit, so that one account is debited and the other account is credited. So let us look at this double entry system of accounts in our next slide. The motor vehicle account, to increase an asset, we debit. On January 9, A. White is the details, the folio is general ledger, and the amount is $2,000, all on the debit side of the motor vehicle account. On the credit side of A. White's account, date January 9 on the credit side, details, it's coming from the motor vehicle account, that's the double entry, and the folio is general ledger, the amount being $2,000. So in completing every transaction, the first thing that we'll do is to find out the two accounts concerned. Then we will find out which one we will debit and which one we will credit, which one is being increased, which one is being decreased. At times, both of them might be increased. As in this one, A. White's account was increased and motor vehicle accounts was increased, but one being a debit and the other one being a credit transaction. Transaction number 5. On January 11, 2020, bought equipment, paid by check $500. The first thing that we will do is to find out the two accounts concerned, so that one account is the equipment account, which is an asset, and the other account is the bank account. We realize from the term check, the bank account is also an asset. So it's the cash at bank account. So we put CB, and the other account is the equipment account, so that the equipment account is increase. So we debit, and the cash at bank account is decrease, so that we would credit this account. So now let us look at this double entry system of accounts. To increase an asset, we debit, so that on the debit side of the equipment account, we put the date January 11 under the details column, cash at bank, and under the folio CB, because cash at bank is in the cash book, and under the amount column we put $500. So we debit this asset account. Let us now look at the cash at bank account. The cash at bank account includes a number of entries. On January 1, capital account was $100,000 being on the debit side, because to increase an asset we debit. But on January 3, January 7, and January 11, we credited the account, because all of these were taken from the bank account. Land was purchased for $10,000. Fixtures and fittings was purchased for $1,000, and equipment was purchased for $500. All of them being in the general ledger. So under the folio column, we put GL, standing for general ledger. We put the amount 10,000, 1,500, and we put the details land account, fixtures and fittings account, and equipment account respectively. So this is a look at the cash at bank account after this series of transactions. Transaction number 6. On January 13, 2020, we bought goods for $2,000 paying by check, so that the two accounts concerned, let's pull up the marker, we circle bought goods. Once we see bought goods, we know that this is purchases. And the other account concerned, once we see the term check, we know that it is cash at bank. So we circle check again, and we know that this is cash at bank, so that one account is increase, which is the purchase, and the cash at bank account is decrease, so that we would credit this account and we would debit this account. But for simplicity, we will not call this the purchases account as yet, but in a future presentation. So we will call this the stocks account. So that we will debit the stock account and credit the cash at bank account, as we do in our next slide. To increase an asset, we debit, so that the stock account is an asset. So on the debit side of the stock account, we put in the date January 13, cash at bank, under the folio column CB, the amount $2,000. Then we will go over to the cash at bank account. The cash at bank account now being on the debit side, January 1 capital account GL $1,000, and on the credit side, a number of entries from January 3 to January 7 to January 11, and then on January 13, stock which was debited in the stock account is now credited in the cash at bank account under the credit side. It is a general ledger account and the amount is $2,000 as we follow the cursor. So the cash at bank account now looking very busy, more than the other accounts, because it is the account that is laid heavily on in any business where a number of transactions are done. Our final transaction on January 7, transaction 7 on January 15, 2020, we sold goods receiving $300 in cash, so that the two accounts concerned are sales for sold goods and not cash at bank this time, but cash in hand. So we circle cash so that cash is increased. So we debit this asset account called cash, but we will not use sales, but we will use the term stocks. So that we will credit the stock account. So our next step is to look at the actual accounts. So in the stock account, it's two entries. On January 13, on the debit side, cash at bank, $2,000, the folio being CB. But on the credit side, because the stock account is now being decreased, we credit the account because it is an asset account. To credit an asset, to decrease an asset, we credit. So on January 15, on the credit side, the details now being cash in hand, not cash at bank, but cash in hand, and the folio being CB because both cash in hand and cash at bank are in the cash book, and the abbreviation used here is CB. It is used as a guide to the accounts, to doing the double entry system of accounts, which is basically recording the accounting transactions so that the amount would be $300 on this side. So this is a look at the stock account at the end of transaction number 7. Our next step would be to look at the cash in hand account. The cash in hand account is also an asset account. It is a current asset, just as the cash at bank account. So that to increase an asset, we will debit the asset account. On January 15, on the debit side, we put stock account because the stock account is the account that was sold for us to get that $300 in cash. So the folio would be GL because the stock account is in the general ledger and the amount being $300. For now, we use stock account. In the future, we will be introduced to both the purchases account and the sales account. For simplicity, for those persons who are now being introduced to this subject, we will not explode into the purchases and the sales account, but for simplicity, we put it in one account and we call it the stock account. So this is a breakdown or a simple analysis of the double entry system of accounts. Well, I hope that you enjoyed this presentation on the double entry system of accounts, which is actually bookkeeping, and bookkeeping is basically the recording of accounting transactions. Be prepared for our next presentation on the accounting cycle and an introduction into the journals, where we look at the sales book or the sales journal, the purchases book or the purchases journal, the return inwards and return outwards journals or books, and the general journal, or simply called the journal. And we will also find out that the cash book is also a journal, because the journals or the books are of prime or original entry. So remember, our next presentation will be on the accounting cycle, where we will see the link between the accounting cycle and the journals. Please remember to like, share, or subscribe to this channel as we continue our search into this wonderful subject, one that we can appreciate, called the principles of accounts. In some jurisdiction, it is simply called accounts or accounting. I hope that you enjoyed this presentation.